Boys, welcome back to another video. It is currently 6:25 a.m. for me, so I'm trying to grind this out so I can get another video pushed through tomorrow or later in the day. I don't know why I said tomorrow. No trade recap today as it is December 24th, Christmas Eve. So happy Christmas Eve to all of you guys, and we got to remember why this is a holiday in the first place. Not because of the presents, not because of Santa, um, but the joy that we bring because Jesus Christ was born on this day. And yes, I know it is arguably, there's arguments about he wasn't actually born. We're saying he was born on this day, so I'm gonna just say I'm gonna go with that. But yes, I do know that um, it's called that he wasn't actually, or I don't know, but there's improve. We'll get into that, or we won't get into that. But yes, Christmas Day, we celebrate it because of Jesus Christ, the birth of our God, the birth of our Savior. So happy Christmas Eve, the day before he was born. I hope you guys are all in good spirits. And yeah, trading, really quick before I get into this video, trading is huge. It's a big part on psychology. So we gotta be in good faith with God. You know, I don't know where I would be if I didn't have God. I don't know where I would be. Because I know I wouldn't be able to handle my loss without knowing God actually has a plan for me. And that I just need to continue. But basically today we are getting started on market structure. Huge, 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 huge. Stop going against trends. Go with the trend. The trend is your friend. I know you guys heard of it all. To a T though. Take that to a T. Um, don't just start trading trends. I will slap you. Do not just start trading trends. You got to be smart about it. You know, if you see a liquidity sweep, and then you see, and then I'll talk about all of that. Okay, let's get into number one. What is market structure? The sequence, we're going to be using this tool a lot. The sequence of highs and lows tells you who's in control. If you don't have this, break of structure, market structures, change of character, change in state of delivery equals meaningless. They're all meaningless if you do not have the sequence of highs and lows, obviously, because there would be no structure. There would be no trading. You would be trading. I don't even know if there'd be a market without a structure. So, really quick, bullish market structure looks like this: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. You guys get the trend. Let me leave this up here so you guys don't get confused. That was kind of bad. And then we got a bearish market. Lower high, lower low, lower high, lower low, or lower high, then lower low, then lower high, then lower low. Boom. Two different market structures, and these are the only two you need. And then I think we get into it later, but we also have accumulation, which we can talk about in a later video. Accumulation, power of three, accumulation, manipulation, AMD, distribution. Okay, let's get into number two, shift and control. This is the change in structure. Change of character versus market structure shift, the difference. Change of character is first break against the current trend, which is like a warning that we might be changing characters. And then market structure shift equals the change of character, the warning, plus a strong follow through, which is confirming control has changed. So basically, if we look at this, and by the way, change of character, change in state of delivery, break of structure, market structure shift, all that stuff, I take it with a grain of salt, and I believe it means the same. So I use this tool that marks out market structure shifts with break of structure. So first you'll see a market structure shift happen, and then a break of structure. Basically what I was saying about change of character and market structure. So I think a market structure shift happens, and then we get another confirmation to where another low is taken, Then a break of structure happens, and we're like, okay, we're confirming that we're gonna go lower, right? But you guys have to take this with a grain of salt. You see this, but in a higher time frame, I want to talk about higher time frames as well. But in a higher time frame, we're just having a retracement. We haven't had a market structure shift yet, but in the 1 minute we have, you guys are gonna start trading this trend, and you're like, oh, why'd I get stomped out when I was going for this low? We got stomped out by this high. Just like, cause you gotta check the higher time frame, dude, right? So now we're gonna get into break of structure. Break with the current trend, right? If we have a structure going up, we create a new lower. If we have a bullish structure, so let me mark this up. If we have a bullish structure, boom, 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 take this high, and then we break against this low. Doesn't mean anything yet, right? Because we could just sweep this liquidity and then go higher. Then we create another low, boom, break a structure, right here. All right. Confirms continuation, not a reversal signal, right? Difference from market structure shift is break of structure equals trend continues, market structure equals trend changes. So that's why I was saying this first one doesn't mean anything, but if we break this, then we're actually changing. This is a market structure shift, right? Break of structure, so this is a break, so this would have been the market structure shift. Break of structure means we're just continuing this trend, right? Trend changes here. Break of structure confirms this trend is continuing, right? Then we're gonna get into number 4, CISD. Strong close, showing intent, often happens before structure breaks. Early signal, not a confirmation. Difference from change of character. CISD equals intent, change of character equals structural damage. So CISD I love using for all my trades. It's one of my confluences I use the most. So let's get into right here. So the last down move with like 2 or more candles I like to use. Some people use it with 1. I mark the body high. Some people like to mark the wicks. I just use the body high, close, boom, and then say this created a fair value gap. We retrace into that perfect trade, right? CISD is really all I use in lower time frames. Market structure, break of structure, change of character is what I use for higher time frames, right? To see what trend we're in the higher time frames, so I can go in a lower time frame, look for, manipulation, then a CISD, then a retracement, and then target the highs for a bullish trend. So it's a quick video for you guys. I do want to say, for break of structure, market structure shift, and all the other ones, use wicks and wait for a body close. If you do not get a body close, then it's just a sweep on liquidity. Really is all what it is. So if this did not close and it just wicked all the way down here, boom, we're going higher. Just sweep on liquidity. Do not be fooled by that. We need a body close, right? And A++ is a displacement through it, to where you have an order block here, displaces through it, creates a market structure shift, then a break of structure, retraces, boom, target lower lows. So we'll go into like 3 right now. So I mean, it's already marked out. We can find 3, but let's go market structure shift, break of structure. So we're bearish here. We wait for the last high to get taken. Boom, market structure shift. The last high. We're not waiting for this high. We're waiting for the last high, market structure shift. We wait for another downtrend, and then if it were to come back up here, a break of structure, which equals a continuation, would happen. All right. So market structure shift, boom. We take the last low. Right. This is not the last low because this low was created. So this last low gets taken. Body close, market structure shift, boom. We come back up, come back down, close below this last low, break of structure, continuation. The reason it consolidates is because who knows what the higher time frame was doing, right? We're bearish here, but the higher time frame, I'm pretty sure we're bullish. We're about to take all-time highs. Right? Another one we'll go through. Let's go here. So boom. We're coming up. Last low. Break of structure taken. Don't necessarily know why it wasn't here, but we come for a retracement. Create this low. Come up. Break of structure. Right? So these are just breaker structures happening over and over and over again. Let's see where the market structure shift was. It's probably up here. Boom. Market structure shift. Then we have break structure, breaker structure, breaker structure, breaker structure. As it's continuing, as the signal is continuing, it's showing us that we're going to keep going bearish, right? Because all these breaker structures. But the real market structure shift happened right here. And then we just keep going lower and lower and lower and lower. So that's it for today's video, just talking about market structure itself. Very important concept to know in the higher time frame of what we're doing. So yeah, I would go to the higher time frame. I don't know if this works in the higher time frame. It does work actually, yeah. Let me zoom to the left. Jeez, man. Yeah, so we just had a break of structure to the upside. So we are bullish, not full. So we are in a bullish structure right now. What I love to do is, like, when I first started trading, I would look at higher time frames and just be like, are we bullish, bearish? Look at this, boom, 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 we're going down. And what I used to love to do is, like, okay, I'll mark this low, see where the next high is, next low, next high, next low. And then I would just stop it and be like, okay, that looks like a pretty bearish structure to me. And that's how I would test myself. So I want you guys to do that 5 times after watching this video. Is just take out the path tool, which is in this icon, which is the brush where you see your brushes, and just mark out the low, then the next high, then the low, then the next high, then the low, then the next high, then the low, and see where you think, what market we're in, if we're in a bullish or bearish market. But that's all I have for you guys today. Stay tuned for the next video coming out. I don't know what it will be on, maybe order blocks, or we might do candle patterns in case like beginners are starting to watch, which I never cover. So this is like intermediate stuff, because I never covered like what wicks mean, what bodies of the candle mean, time frames, all that stuff. So we'll get into that probably. But other than that, have a good one, guys, and thank you guys for watching. Make sure you like and subscribe. Trader recaps won't be coming out till next week, Monday and Tuesday. If I do end up trading those days, I might be done for the year. We'll see. But thank you guys again so much, and happy Christmas Eve, and I hope you guys have a great Christmas.